So 2021 was let's just talk about 2022. Hi, welcome back to another Coffee with Coleman, where we love to discuss Washington, D.C., business, real estate, all that good stuff. My name is John Coleman, and I'm a real estate agent here in Washington, D.C. with the Jason Martin Group. Quick favor, if you've officially made it to 2022, then go ahead and hit that like button to let me know you're here. And also, if you want to stay up to date on all great stuff about our great city, then go ahead and hit subscribe, because across all of 2022, I'll be putting out new videos to keep entertaining you, or informing you, or maybe a little bit of both. So either people don't find me otherwise interesting, or it's just a huge topic of curiosity, but friends and family keep constantly asking me what's happening in the market right now. And as you know, I like to keep you guys informed and reading tea leaves and all that good stuff. So here we're gonna go through the biggest items you need to be thinking about and what my general thoughts are for this coming real estate market 2022 year. So let's start with the three most crucial talking points when talking about the market. So let's start with what the experts are saying, or experts, bunny ears, not bunny ears, people that spend a lot of time and get paid a lot of money to talk about this stuff, is they are universally saying that the market is not going to skid to a halt. In fact, we're gonna see maybe some normal growth and maybe some more exuberant growth. And it's funny, because the numbers that I'm reading is anywhere between 2% to 13%. And 2% is like below average, and 13% is closer to what we were seeing in like 2021 and 2020, which were just atrociously crazy years. And frankly, it's hard to imagine another year of that type of appreciation, but it's all possible. The reality is that type of growth is not sustainable over prolonged periods of time. But the $1 million question is when does that period of time actually come to a close? Even if it's not hitting the ceiling, the rate of growth needs to chill out a bit. As a point of reference, US prices have grown on an annual basis about 4.1% since 1987. So it looks like we're gonna be probably about there or potentially higher. And if you're looking to keep receipts, and I do, because I want to come back in 2023 and let you know what people said, is CoreLogic is the one that said 2% increase, and all they're about is data crunching for real estate. And Goldman Sachs is the one that's saying the growth is going to be higher into the teens. So keep that in mind, and I'll put the links below so you can read who's doing what in which articles. Number two is rates. This is where inflation comes in. If you have been under a rock, maybe you haven't noticed that the price of all services and goods have generally been going up. The other experts have said it's based on the reaction to COVID and the fear that when this all started, the market was going to just collapse, and our government did everything they could to keep things going. And in reflection, it seems like maybe, depending on how you're looking at it, they did too good of a job, because homes, record. Stock market, record. Cryptocurrency, doesn't really tie to them, but record until recently, sorry, hodl. But everything's been going at a very, very high clip, and that's because of what the government did to help us make sure that things kept chugging along, especially during the early part and the crucial parts of the pandemic. And again, this is all non-sustainable growth, which led to the inflation, which everyone started talking about in late summer, early fall, and has continued since then. So the way to start combating that is to start dialing things back to pre-pandemic levels and adjust and monitor over time to see where things are at. And in the first few weeks of 2022, they did just that. Interest rates hit their highest mark since, you guessed it, May of 2020, when this whole thing started to move. It's expected to continue to climb. The funny thing is, it's very much a recency effect, because 2 years ago, if I told you were gonna get like a 3.5% interest rate, you'd be kissing me my big old fat bald head and grinning ear to ear. However, since all of your friends have now been bragging about having interest rates in the twos, and that's all you've seen on the news, well, now you're like, I want a better deal. This seems expensive. all the numbers I've been looking at are in the 2s and low 3s, and you're telling me you have to pay more? And how much does this impact you? Well, here's an example. If you're buying a place with 20% down at $675,000, the monthly mortgage payment would be around $2,800 a month with a 3% interest rate. If you move that interest rate to 3.75%, which is where they think we're going, that mortgage payment is now going to be just above $3,000, which means there's going to be an increase of $200. And if you want to look at this on a percentage basis, that's about 8% more. So it matters. If you're pushing the budget, having this come over in the next little bit of time is going to impact what you can afford in a house. So things to keep your eye on and be in constant conversations with your lender about how this looks for you. The third big bullet point is talking about inventory. And here, nothing, nada, not enough. We didn't build enough for what people are looking for. People want extra room with square footage, and really what we have popping up more than anything else is new condos. And don't get me wrong, I love new condos and they are still selling, but people want single family homes and there's not enough people building these single family homes. And if they're not building enough single family homes and there's not enough development to take and flip homes, well, that means that we're all depending on the secondary market. You need Shirley to sell in order for you to buy a new house, and Shirley probably just got a new interest rate in the 2s in the past 2 years and is sitting pretty and thinking that her mortgage payment is super nice. And if that's the case, a whole lot less likely to sell because they're very comfortable. That's going to impact people's desire to sell, which means inventory could stay very, very tight. As an example, a market where people have equal footing, so like sellers and buyers have an equal footing at the negotiation table, you want to have just over 6 months of inventory, meaning if nothing else came on the market, there's enough houses to last about 6 months of normal absorption. What we've been seeing recently is about 1 to 2 months in reality at a lot of the big popular neighborhoods and even just emerging neighborhoods. It's less than a month of inventory. There's just not anything in there. Comes on, goes away. One example of this was Brookland this fall. Like even in the fall when other things seemed to be chilling out a little bit, Brookland was bonkers. Like things were going $200,000 over in some scenarios, and I just couldn't believe what I was seeing, but that's where people wanted to be at that specific time. They like those houses. And we're going to continue to see that in and around DC total, especially for single family homes. And so what are my thoughts and where do I fall in all this? Well, in the fall we talked about how we thought condos were going to be a bit of a deal, and frankly, I'm super happy with the results we saw with our condo buyers this fall. People came out and took advantage of what I think was a good market. They used programs like HPAP, which have been traditionally difficult to get accepted. They negotiated price reductions, and they even had some of their closing costs covered as part of the negotiations. And so in the first 2 weeks of this year, it's already starting to feel a little bit different for condos. Things are getting snatched up more quickly, especially if they're looking right and priced right. And that also just might be a symptom of the fact that there's not enough out there currently, and so everyone's getting funneled to the same thing. Speaking of symptoms, we're getting ravaged with cases of the new COVID variant. The past 2 times we had new variants, or the first one and then the variant, I should say, we saw people pull back from making their plans, especially from starting to consider coming back to the city and not working full-time remote. It feels like this surge is being handled a little bit differently, and while folks are hunkering down right now while the hit is strong, there's a general consensus that seems to be that this will pass. And in the next couple of months, we'll start to be in a spot where we can start moving stuff forward again, and they're planning more for that as opposed to being on defense of what we're seeing. And candidly, I don't have data on this, so you might think I'm an idiot. I might not know what I'm talking about in all reality. However, this is based on discussions on the internet. This is based on who I've been talking to and clients that I'm working with. And so that is what I'm hearing and seeing. If you're looking for a house, good luck. Put your gloves on and get ready to fight. Things are going to be just as competitive, and while it might not be as crazy as the past 2 years, if you don't come with the idea that you're gonna have to compete, well, you're gonna be in a tough spot. The reality is if you're gonna be shopping for a house this year, learn how to compete now, so when you step through the door for the first time, you know what you might need to do, because if you fall in love and you want the house, it's almost too late. to act in real time. So prepping yourself now for a competitive market, knowing how to make yourself competitive, which if you have questions about, reach out to me. I can tell you a little telltale stories of how we work with our clients to tell them how to prepare themselves. But there's a lot of different things you can be doing, and preparing now could save you time, effort, and money, because if it starts hot and continues hot, the prices are gonna climb from February to July. And if you don't land something here, well, interest rates might be higher here, prices might have gone up a little bit here, and it's just things you're gonna have to consider as you're going through it. So prepare, prepare, prepare. So what I miss, put it in the comments below. I'll try to address them there. Or if it's something I can extrapolate on, I might even make another video about it, because I like making videos, so why not? And again, if you have questions about a specific neighborhood, what kind of competition is going to be there, what you're going to need to do, or just how to prep yourself for the market this coming year, reach out. I love talking shop. Real estate's my job, but it's also a hobby, and I'm in it day to day, and I love having conversations about it. So feel free to use me as a resource. The reason I put this out there is because I like educating our public and our people about what's going on in the market today. Other than that, welcome to 2022, and thanks for stopping by another Coffee with Coleman. Peace.